already incorporated more than 9,000 case laws available in the Taxo, all be pertaining to the GST, and all notification circulars, along with the order and guidelines. Not only the notification circulars, order and guidelines, with the beautiful search options is available here. And for the rates, especially rates, cess, exemption, and RCM, we are also providing you the tree for the particular period. And one of the most recent requirement which comes from the most of the subscriber is the sample draft replies. More than 50 sample drafts are also available there. And also your basic query related to any fundamental GST issues. Our experts will give you the answer of the your query within 24 to 48 hours. And basically, all of you need the basic things like updated act, rule, commentary, rate finder, and many more things are available in the online. And I can say that we are the only online service provider in the market which are providing you the commentary on the all the sections which we are providing the case studies on the more than 26 sectors. All these are the available. And as all of you know that from the last couple of months, this is the time in the GST. Time is the for the litigation. And we are the only service provider in the market. Those are facilitating the weekly sessions on the GST litigative matter, beat the case laws, beat with the latest notification circulars, which help you to enrich your practice. And beside this, you every week, every day, you also get the updates via the WhatsApp and email. And Taxo is the conceptualized by the experts, leading experts in the GST, our mentorship with the CA, Dr. Atul Kumar Gupta ji. And we keep the small things in mind. So approach of this solution is the complete practice oriented. And if anybody is not using the Taxo, I can request that you are missing a lot, and you can if you're looking for a demo or you have the any query, you can connect with our team. I'm just repeating the number of my team is the 4x9 693 426. See is the 60. I'm just again repeating the number 4x9 693 426. You can contact to the Srishti. And if you are not using that Taxo, take a demo. And I can bet you that all your needs pertain to GSTB get addressed at a one point. Now, I will not take too much of time and would like to introduce our esteemed speaker for today's session, CA Dr. Atul Kumar Gupta ji. And as all of you know that introduction of CA Atul Kumar Gupta is just formality, because most of us know him from so many years, and also knows his contribution to the profession and the indirect practice. C. Atul Gupta ji is a board member of the IFAC and XBLR International and chairman of the GST committee at FIA and the past president of the ICI in the 2021. He served as the chairman of the Digital Accounting and Assurance Board, Board of Studies, IT committees, and indirect committee of the ICI and the numerous boards of the other associations and bodies. He is a very active member, especially in the field of the indirect taxation. CA Atul Gupta ji has authored many relevant books. I think I remember his books from the 2006 when he written the books on the service tax. I think that was the first book on the service tax. Has published numerous articles in the leading newspapers, magazine, professional newsletter, and delivered more than 1,600 lecture in different seminars and conference. Now over to Atul ji to take today's session forward.
Thank you, Manoj. Very good evening, friends. And let me start immediately because we have the limited time. So, friends, when we talk about the finalizing our accounts audit or finalizing the returns for the year 23-24, जैसा कि मनोज भाई ने कहा that how we can do a reconciliation with the vis-a-vis the GST. So maybe some of the tips, or I will say it's a checklist which everybody should prepare before finalizing the books of accounts or signing the audit report. So I am giving you the checklist for the next 3 months that you have to take care while you are completing your assignments. As far as the sales are concerned, my dear friends, there are the many aspects which one has to check. Number one, that as per the law, there should be a continuity of the sales invoices. Even if there are some cancelled invoices are there, there should be a serial number which need to be followed. So it should not be a case that you have a client or you have a employer wherein the invoices are serial number 4, 10, 20, and like that. So that is not permissible under the eyes of the law. So there should be a continuity in the serial number. Second aspect, but what is very, very important, that these days, many times we are offering the sales. You will get a pair of socks along with the shoes. So that is called the mixed supply. So whether we have rightly charged the rate of tax or not is something that we need to check. There are the many reasons. But in case of a mixed supply or a composite supply, the cases are there in the department, when the department is asking the higher rate of tax as compared to the tax which is being normally paid by the SSC. So in case I'm selling the shoes for 2,000 rupees and with a pair of socks for free of cost, in that case, it is a mixed supply and the higher of the rate will be applicable. So if the shoes rate is 12%, whereas the socks rate is 18%, it will be the 18% on which on the entire value of 2,000 which will be applicable. So that's the point which you have to take care, that in case there is a whether we have rightly charged the right rate of tax or not. Then, my dear friend, the place of supply. So whatever the invoices I am raising, whether it will attract the IGST or it will attract the CGST plus SGST is the point which I wish to dwell upon. Now, my dear friend, I am giving you a 2-3 example. For example, an e-commerce operator is there, and in the e-commerce operator which is located in Haryana, somebody is from the Punjab is giving an order, but the goods has to be delivered in. So somebody from Haryana itself is giving the order, but the goods has to be delivered in Himachal Pradesh. So whether it will be a CGST, a local supply, or an interstate supply, that is a question. And I just wish to clarify that it is a IGST supply, it is not a local supply. Number two, that say for example you are taking the certain services supplies like a renting of residential property. You are based in Delhi and you are having a property in Haryana. So whether you should charge the IGST or you should charge the CGST or SGST and you have to take the registration over there is a question which you have to analyze. And here also you may charge the IGST if that is the situation. So my dear friend, it's very important for all of us that if I will pay the CGST and SGST as compared to my liabilities for IGST, in that case, there will be a future liability which will emerge out and you have to again pay the IGST, though there will not be any interest liability, but you have to then again pay the IGST and claim the refund from the department for the CGST and SGST wrongly paid. Then, my dear friend, the next aspect, which is again very, very important, is about the HSN. So in case you have chosen the wrong HSN code of your product, in meaning thereby your rate of tax will be different. So in case, say for example, you have to choose a particular HSN wherein the rate of tax is 12%, whereas you have chosen HSN where the rate of tax is 5%. So in case that the mistake is there, in that case also you have to do a rectification later on and you have to pay the interest along with the penalty. So that's a very, very important point, that whether you are SSC as an auditor, if you are there, so whether the SSC has chosen the right HSN or not. So the HSN rate of HSN, the classification, the rate of tax, and the nature of tax, all these things are the very much interrelated. Then, my dear friend, there are the certain requirements which are there in the tax invoices. So if you will see that I have specifically given in the screen as a separate color, that whether your invoice complies with the requirement of the rule 46 or not. So my dear friend, as per the rule 46, every invoice should contain the 17 ingredients. So whether my invoice carry all those ingredients or not is something that one has to assess and check. And in case your invoice is a faulty invoice that doesn't carry all the details, in that case, the SSC will be liable to pay a penalty of rupees 25,000 rupees. I'm not talking about the each invoice, but it is 25,000 rupees provision is there. Then, my dear friend, the same thing which I discussed here about the rate of tax or the HSN code, here also, in case you are feeling that your activity is exempted or a nil rated or a non-GST supply, so whether he is right or not. So in case you have the profit and loss account available with you, wherein there are the certain turnovers which are reflected as an exempted turnover or a nil rated turnover or a non-GST supply, then you should check whether this is actually nil rated or not. So it may not be, it may be a kind of a dilemma, or I will say that illusion in the mind of the assessee that this activity is taxable, not taxable. For example, selling of scrap. So whether the scrap will attract the GST or not is a question. If somebody will ask me, I will say it certainly it will be. So my dear friend, normally, say for example, I'm dealing in a certain particular product, and certain products are faulty in nature, and I'm selling the scrap. So in that case, whether the taxability is there or not, either I have to reverse the credit or not. So there are the whole lot of provisions which are applicable on the sale of scrap, something that need to be taken care. Then, my dear friend, finally the sales tallied with the books of accounts or not, meaning thereby the GSTR 1, GSTR 3, GSTR 3B, GSTR 1, GSTR 3B, and GSTR 9 should be tallied with the books of accounts is something that you need to take care. So, my dear friend, when I discuss with you about the sales points, so there are the 8 points which I discussed with you, that when you are finalizing your books of accounts or you are doing an audit, all these 8 points you should check. So, this is something, a kind of a checklist I prepared. Then, my dear friend, when I talk about the purchases and expenses, that is something, again, the purchase, whether the purchase is telling with the books of accounts or not, is something there. Then there are the cases when somebody will say that I have a purchase which is an exempted purchase or a nil rated purchase. Oh, I have to check whether that is right or not. And even later on, I will discuss about the RCM liability, wherein it's very, very important that in case I have a certain expenses which are on which the reverse charge mechanism is available. For example, the advocate services, the rent a cab services. So there are many services. The GTA services are there where the reverse charge mechanism is applicable. Now, in the reverse charge mechanism, there are many questions. So, on which activity the reverse charge is applicable? Number one. Number two, when it is applicable. So, when my liability to pay is there. So, as per the law, it is the 60 days from the date of invoice or payment, whichever is earlier, is the law. Is the law says that you have to pay the tax under the reverse charge mechanism. So, if prior to the 31st of March, you have to pay and you have not paid, so in that case, you have to pay along with the interest and the interest. So that is something that you need to take care. And then, my dear friend, on which purchases I am eligible to claim the ITC? Number one. Number two, that whether this is a block credit or not, or that is a credit related to the personal expenditure. So in those purchases, the ITC will not be available. The another aspect is that in case you are claiming the ITC on certain expenses, and at the same time you are booking the purchase entry with the full value. I'm trying to convey you that, for example, you purchase certain goods for 1 lakh rupees, 18,000 rupees is the GST. Now, if you are claiming the 18,000 rupees as a ITC, in that case, the purchase value should be only 1 lakh rupees. It should not be 1 lakh 18,000. So that is something that you need to check. So these are the 3 aspects or the 4 aspects you have to check along with the RCM in the purchase side, that whether you are complying with the law or not. Then, my dear friend, RCM I have already dealt upon, so there is no need to discuss separately. So RCM I have mentioned that you have to see that the ITC taken, the self invoices has been generated or not, and the mixed supply, composite supply I already covered. Then, my dear friend, as far as the ITC is concerned, there are the 10 different aspects one you have to check. Number one, I just wish to clarify you. Number one, that the credit should be related to business. So it should be related to business, then only the credit will be available. Number two, if the expenses are not related to business, then the credit should not be coming to your books of accounts. Number two, that you have a genuine invoice. So you have a valid invoice available with you. Now, the valid invoice, what is valid invoice means? There are the provisions. Notification number 39/2018 is the notification which deals with the invoicing. So whether the invoice is a genuine, whether the invoice is a valid invoice or not, is something that one should check. Then, my dear friend, coming to the next point, that is the third one, that the supplier. So the third point is the supplier, whether the supplier has, just a second, please. Now, my dear friend, the third point is whether the supplier has paid the tax or not. So that is something that credit is reflecting in 2B or not. And the fourth point, my dear friends, that whether the service or goods have been actually received or not. So in the stock register, in the e-way bill, the payment slips, the toll slips, everything is available or not. And finally, fifth one, that whether you have filed the return or not. So after these 5 points, the next point is that whether this 180 days, you have paid to the vendor or not within 180 days from the date of invoice. Seventh one, the whether this is a block credit, the ITC on the block credit act is section 17(5). Then, my dear friend, the rule 42 and 43, that is, in case you are dealing with a taxable and exempted product, then the proportionate credit is only available. In case of a ISD, so whether you are complying with the ISD provision or not. So, my dear friend, all these 9-10 aspects are there, wherein you have to check why vis-a-vis the ITC aspect is there. So, my dear friend, unless and until you will not be sure that the credit which has been taken by the SSC is actually a eligible credit and he has rightly availed and utilized that credit, unless and until that is not sure, the liability will be there. Tomorrow you are aware that there are the lots of cases are there when there are the allegation of a fake invoice is there. The credit, you are getting a notices under section 74 that you have to reverse the credit because the vendor is vanished, their registration got suspended, cancelled, and something like that. So, my dear friend, before doing the conclusion of this audit, one should check, well, at least for the last 1 year, if not for last 5 years, that okay, whether all the suppliers are rightfully claim the credit or not, whether they are available or not, their registration are not getting suspended or cancelled. That is something that one has to do a due diligence. And there are the tools available. I just wish to share with you. There are the many tools available which give you this kind of a report in fraction of seconds. So that's a very, very important part that you have to take care, because otherwise you will not be able to check the 1,000 suppliers one by one. It will take days. But there are the tools available which help you to check within few seconds that whether all the suppliers are the genuine suppliers or not, they are rightly paying the duties to the government or not. Then, my dear friend, you have to see the payment side, that whether the RCM, which is a liability of certain services under the reverse charge mechanism, has to be paid in cash only. You can't pay through the ITC. That is something there. If any interest liability is there, whether that is being paid or not, or any late fees is there. So this is something a payment side. So on the last slide, I discussed you the 10 parameters. The purchase, I discussed with you the 3 parameters, 4 parameters. Sale, I discussed with you the 8 parameter. So practically right now, 8 plus 4 plus 3 plus 10. I have already covered around 25 such checklists which you have to take care. Now coming to this payment of taxes, again, there are the 3 aspects which you have to take care. Is something that we all are discussing. Now, my dear friend, rather than discussing you each and every aspect of the ITC, because the time it will take a lot of time, I just wish to share you, for example, that I will take you to the next part only, that what all checking you should do. Now, my dear friends, coming to the review of the financial statement. Now, my dear friend, there are the 4 type of checking which I am suggesting you before you finalize your books of accounts or before you sign the audit report. The first part is, my dear friend, as far as the analysis of the financial statement, review of the profit and loss account, and the balance sheet is there. Now, my dear friends, in case of a profit and loss account or the balance sheet, one should check the unusual behavior. So normally your expenditures are 50 lakhs rupees in a month, but in the month of March or in the particular month, suddenly the expenditure of 2 crore is there versus the 50 lakhs normally. So that is something that you need to check, that why this unusual behavior is there as far as the profit and loss account is there. Then, my dear friend, the net profit versus the gross profit ratio. So normally if the net profit or the gross profit ratio is 4%, but suddenly in this year it is 2% or it is 6%, one has to check that why this is there. So there is a skepticism you have to carry along with the industry ratio as well, that okay, whether that is doing a right way or not. Then, my dear friend, you have to check the comparative profit and loss account and the balance sheet for that particular unit, branch, project as well, as the case may be. As far as the genuineness of the invoice, I discussed with you, there are the 2 aspects of the genuineness. One is the notification number 39/2018, that is the invoices are proper or not. Number 2, as far as the fake invoices aspects are there, that whether there are the allegation of a fake invoice, the supplier is not vanished, their registrations are active. So that aspect you have to check when you are talking about the review of the financial statement. Then, my dear friend, the next part is the debtor aging. As you are aware that in case there are the long-standing debtors are there, so whether they are actually the debtors or not is something that they are But as far as the creditor aging is concerned, this 180 days is a very important aspect, because in case the creditors are for more than 180 days, then you have to reverse the credit of whatever the credit you have claimed. So that's the aspect you have to take care. Then, my dear friend, advance received. Now, on the advance received, in case the advance is related to services, in that case you have to pay the tax on the basis of the advance received. But in case the advance is related to the goods, in that case it is not taxable. So, my dear friend, in case the advances are related to the services, then the GST liability is there on the advances as well. So that is something that you need to take care. Then, my dear friend, security deposit. There are the two type of security deposits are there. One is a refundable security deposit, and another is a non-refundable security deposit. So, my dear friend, as far as the non-refundable security deposit is concerned, that is something subject to the GST immediately. But in case the refundable security deposit is there, in that case, it is not taxable. Now, my dear friend, what happening in certain cases, that the security deposit are against the certain consideration, again adjusted against certain consideration. In that case, also the moment you are adjusting the security deposit, that the taxability of the security deposit will arise. So that is something that you need to check. Then, my dear friend, coming to the next part, this is pricing and the valuation. So, my dear friend, when we talk about the pricing, there are the various rules which are related to the valuation aspect. So, for example, you are dealing with a sole distributor. You are supplying to your branches or to your related party. You are supplying to your distinct person. In that case, what will be the value on which the GST has to be charged? So there are the provisions wherein whatever the value you will declare, that will be acceptable. But at the same time, there are the conditions for that. In that case, my dear friend, you have to be very careful. Number two, the out-of-pocket expenses, whether that will be subject to GST or not, is something that you need to. There are the certain barter transactions. So whether the valuation has been rightly arrived on the barter transaction is something that you need to check. So there are the many aspects which I discussed with you as far as the valuation principles are there from the rule 28 to rule 35.6. You have to take care. So this is something that you need to learn, understand, that whether the valuation aspects is being rightly taken care by the SSC or not. Then, my dear friend, the reconciliation, at times the revenue recognition will be different as compared to the GST turnover. So one has to prepare. For example, the earlier AS7 was there. As far as the completion of the contract method was, contract completion of the construction contract was there. There was a different revenue recognition vis-a-vis the GST turnover, and specifically in case of a continuous supply of services. So, my dear friend, when there is a continuous supply of services, there will be always a difference between a revenue recognition vis-a-vis the GST turnover, and that you have to prepare a reconciliation so that tomorrow, if the liability of the department will try to scrutinize, then you can very well explain. Then, my dear friend, exchange rate fluctuation. In case there is exchange rate fluctuations are there, how to treat the benefit, the profit or the loss as far as the exchange rate fluctuations is there, you have to take care. Then, my dear friend, the target discounts as far as the books of accounts are concerned, the another aspect is the target discount. At times, my dear friend, say for example, I am buying a one goods, then I am getting a discount of 10%. But if I purchase 100, in that case, additional 5% discount, meaning thereby the total discount will come to 15%. Now, how to treat this 15% discount, whether that will be subject to GST or not, is something always a question. So that is something you need to check the terms of the agreement, whether it is a GST credit note, debit note, or it is a commercial credit note, debit note, is something that you need to check, and then only you should be arrived with. HSN and the rate verification, I already discussed with you the taxability of other income. As I mentioned you, the scrap, the interest income, the FD interest, income from shares, income from mutual funds. There are the various type of incomes are there which are getting reflected in the schedules. So whether any of those, say for example, somebody having the 10 different income in the schedule. Now, out of those 10 incomes, how many are taxable and how many are not taxable is something that you need to assess on a case-to-case basis. Scrap sale, I have already discussed with you. My dear friend, this is again a very, very important point that you have to see the depreciation chart. So in case there are the depreciation chart, and in the depreciation chart, there are certain disposal of the assets are there. And you have to check whether those assets were purchased in the last 5 years or beyond 5 years. So in case those assets were purchased within the last 5 years, in that case, as per the section 18 subsection 6, there will be a liability of the reversal of the credit as well. So my dear friend, that is something the 5% credit you can retain or for per quarter. And then the rest of the credit you have to reverse vis-a-vis the transaction value, whichever is higher. So my dear friend, this is something that you need to learn, understand and see whether in case of a depreciation chart, if there are the movement of the goods are there are the certain return of goods are there are disposal of the certain goods are there, then you have to see that whether the GST compliances are duly met or not. Then, my dear friend, coming to the next part is about the compliance of the TDS and the TCS provision. As you are aware that they, in certain agreements, there is a applicability of the TDS to be deducted. Similarly, for the e-commerce operator, it is the TCS provisions which are applicable. So you have to see the section 51 or 52. You have to see that whether they are being very well complied or not. Then, my dear friend, in case of refund claims, there are the many type of refund claim. In case of exports, there are the refund claims. For an inverted duty structure also, there are the refund claims. So whether they are duly complied refund claims or not, whether there is any notice which is pending for an erroneous refund claim is something that you need to check. Otherwise, you have to create a contingent liability as well. As far as the 180 days conditions is concerned, I have already explained you that you have to check whether the 180 days conditions has been complied with or not. Export of services, whether the payment has been received within 1 year or not. And in case it is not, then whether the extension has been taken or not. So my dear friend, in case your client is dealing in the exports activity, so you have to ensure that the payment should be received within 1 year. In case that is not there, then the suitable extension or the permission should be there as well to ensure that they are not becoming a taxable activity as far as the GST is concerned. GST payable, if any, is there with the interest, so that liability you have to check. Then, my dear friend, then you have to see the gross to check the square of the income and expenses. So, my dear friend, I just wish to share with you this gross trial balance. As you are aware that in the balance sheet, you will find the net income or the net expenditure. But if you will take the gross trial balance, the main trial balance, there will be the two sides, debit and credit side. So, in case there is a debit and credit side, then there may be a liability of either a reversal of the credit or there may be a liability to pay the GST as well. So, my dear friend, it is very important that rather than believing on the income and expenditure which are reflecting in the P&L, you have to see the gross value to check the square up entries which are there internally. Then, as I mentioned you, the reconciliation of a gross turnover with the GSTR 3B1 and the GSTR 9 is something that you need to take care. You also have to reconcile the 3B with the 2B, as we are aware that in case of a fake invoices allegation or the certain vendors has not complied with the law, in that case, there will be an automatic liability which will come from the department along with the interest and penalty. So that is something that you need to do a reconciliation. You have to see the liability of the interest and then the place of supply. As I mentioned you, whether you have to charge the IGST or you have to charge the CGST or SGST is something that I discussed and deliberated already. Then, my dear friend, it is also important that earlier it was September, now it's November, that the all the credits, so I'm talking about the 16.4, that the credit which has to be taken has been taken prior to the November 30th, 2024. That's the point which you have to take care. So in the last preceding financial year, if that is not being taken care, in that case, the liability will add into this current year is something that you need to ensure that the credit has been taken. Then, my dear friend, coming to certain ratios which can help you, all these ratios are there. I'm not touching upon all these ratios, but these are the various ratios, the net profit ratio, GP ratio, debtor to turnover ratio, or the creditor to turnover ratios are ratios which can help you to understand that, okay, whether these GST liabilities are or the GST activities are well within the framework of the system or not. Then, my dear friend, coming to the various other reports which you should check. Number one is the director's report. Now, my dear friend, whenever you will see the director report, there will be a particular disclosure as far as this current expenditure in the foreign currency is there. My dear friend, in case there is a certain expenditure in the foreign currency, there may be a situation that the RCM liability will be there. Reverse charge mechanism liability will be there on the import of services. Say, for example, you have taken a consultancy services from overseas and you have paid the payment in the foreign exchange. In that case, your liability will be there. So something who has paid the liability or not is something that you need to check. Then, my dear friend, earning in the foreign currency, if there is there, then whether that has been shared as shown as export or not is something that you need to check. So this is the format wherein you will find in the director report this kind of a columns will be there, wherein you can see that if there is an expenditure in the foreign exchange are there, then the RCM liability has to be see whether it has been complied with or not. Then, my dear friend, as far as this import of services I have discussed with you. Then coming to the remuneration to the director. So, my dear friends, there are the two type of remuneration to the directors are there. One is a whole-time director, wherein the employer-employee relationship is there. There will not be any liability, but in case there is a sitting fees is being paid to the independent director, in that case, the RCM liability will be there. So, you have to see in the director's report that how much remuneration is being given to the director, and that will help you to comply with the law as far as the RCM liability is concerned. So this is the way that it will come in the system. Then, my dear friend, coming to the other reports, the CSR expenditure. My dear friend, in the director report, the another aspect is the CSR expenditure. So in the P&L, you will not be able to track that, okay, how much is the CSR expenditure. But in case of a director report, if the CSR expenditure is there, as per the provision of the government, on the CSR expenditure, the ITC is not available. So whatever the CSR expenditure is there, say for example, 2 crore is there and 36 lakhs is the ITC GST is being paid on that. So this 36 lakhs credit is not available. That is something as per the law. So you have to see that it has not been taken. So that's the point you have to ensure. Then, my dear friend, coming to the another aspect, as far as this CSR expenditure, you can see like this, it will be available to you. Then, my dear friend, coming to the another aspect of the internal audit report, one should check the internal audit report if there are the non-compliances which is being there. You have to see the GST report as well. Maybe you are having a ADT 02 issued by the department. So you have to see whether this any allegation of the non-compliances are there in the GST audit report issued by the department. You also have to see the cost audit report, because the cost audit reports at times carry the value of the expired goods, thefts, damage, sample returns, and on which you are aware that the section 17 subsection 5 says that you have to reverse a proportionate credit. So that is something that you can take care from the cost audit report. As I explained you that the cost audit report is applicable on certain companies which are having the turnover above a threshold limit in that case. Now, my dear friend, coming to the another aspect that you should review at your own level for the purpose of your skepticism, that the ITC avail versus total tax paid. You are aware that there are certain conditions that you have to pay the 1% at least in cash. But if somebody is taking the ITC at the tune of 95%, whether that is right, because there will be profit margins, there will be certain expenditure on which the GST is not applicable. Say example, a salary cost. So normally it should be in a range of a 60-70% only, because the rest of the expenses are a non-GST expenditure, or there will be a profit margin. So if the credit is taken 95% consistently, and you don't have any closing stocks, or you have not purchased any fixed asset in the recent years of a huge volume, in that case, there should be an alarm. There should be a signal of some kind of challenges, and one should check in detail that whether this is a rightful claim of a 95%, or there are something to check with. Then, my dear friend, you have to see the input-output ratio as well, that what is the input-output ratio. In case of a ITC availed on the capital goods, as I mentioned you, if you have purchased the capital goods of rupees 5 lakhs and 90,000 rupees the GST you have paid, so 90,000 rupees should not be capitalized. That is something that you have to take care. And other income, if there are the other incomes, then you have to see whether the other incomes are subject to the GST or not. Then, my dear friend, the sale of scrap, if the scraps are sold, then you have to see whether the GST complied or not. Exempted supply, how much is the value, and in case the exempted supply is there, then the rule 42 and 43 will be immediately applicable. So whether you have to see the moment you will find the exempted supply in the P&L of any client, in that case you have to ensure that the rule 42 and 43 is also being taken care. So that is something that you need to cross check. Then the ITC availed versus the purchase value. In case I purchase something different and the ITC is different value which is coming up, then in that case it will be a cause of concern for all of you. Internal audit reports at times provide the aspect related to the ineligible credit or the credit which are mismatched with the 2A or 2B. ITC claimed without receipt of goods is something that you check, and the purchases without invoices. In case the invoices are not available, that is a point of concern as well. That in that case you have to reverse the credit. Then, my dear friend, as far as the Caro report is concerned, as you are aware that in the recent amendments in the Caro report, you have to prepare a separate reconciliation of the GST. That's something different. You have to take care. But in the Caro report, there are the stock auditor comments are there, the cost auditor comments are there in the clause 3. You have to see whether as far as the GST aspects are concerned, that is well taken care or not. As per the 43B, you are aware that if the GST liability is pending, in that case, the stat auditor will reflect into this particular clause. So that is something that you have to take care. As far as the related party transactions are there, that is being reflected that who are the related party. So in case, say for example, Messrs A is there, and they are declaring that the Messrs B is a related party. In that case, the related party vis-a-vis the section section 15, that is the valuation aspects are concerned, that will immediately come into the picture, and you have to see that whether the section 15 is being taken care under this related party. So if you have a related party disclosure in the Caro, meaning thereby there should be a parallel checking by all of you as far as the section 15 is concerned. Then, my dear friend, the dues I discussed with you as far as the related party as well. Now coming to the other reports, as I mentioned you that in the form 3CD, you have to give a GST and wise liability to pay the GST. That is the part A of the clause 4, which is there. And so you have to take care of that particular aspect. That has been the value detail is being asked by the department. In the 3CDA report, clause 14, which deals with the reconciliation of the inventory, also should invite your attention. And the clause 18, when we talk about the depreciation, so that talks about the assets which are disposed of, and so that should take care that the purchases which are beyond 5 years and which are less than 5 years. So on that you have to see that the section 18 subsection 6 has been taken care or not. My dear friend, then we talk about the expenditure of a personal nature that also the auditor normally declare in this 3CD report. So if that is there, the section 16 says that you are not eligible to claim the credit. And in case there are certain penalties or fines are there, that also should draw your attention. My dear friend, clause 26 talk about the section 43B of the Income Tax Act, wherein if the GST payable is there, that will give you a glimpse that if there is any liability which has been declared. As far as the expenditure from a registered dealer or an unregistered dealer is there, in that case, the clause 44 of the 3CD deals with that particular type of expenditure, and that is something that you have to declare. Now, my dear friend, there are certain year-end entries are there which should draw your attention when you are comparing the GST vis-a-vis the financial statement. For example, I am making a provision for the certain services. So ITC should not have been claimed on that. In case of a provision for import of services, in that case, the RCM, whether the RCM is applicable or not, maybe you are required to reverse certain credit along with the interest. So that's something you have to take care. There may be a case when you are claiming the interest from the debtors. So as you are aware, in the GST law, as per the section 15, in case you are taking the interest from the debtor, in that case, that will also be taxable under the GST regime. So my dear friend, it's very important that we are aware that the interest on the sales will be subject to GST as per the valuation provision. And now, my dear friend, coming to the certain aspect, so that my balance to the electronic credit ledger should be matched with the information which I am reflecting in my balance sheet, as well as the electronic cash ledger. So GST paid in cash for the March return, that is on the 25th of April. 20th of April I am paying. So that is something that you have to reconcile with. And in case certain refunds are there. In case there are the certain refund rejected on the GST portal, so in that case you have to reflect the same into the books of accounts and the turnovers reconciliation. I already dealt upon. So my dear friend, if there are the certain SCN or ASMT 10 has been issued, so whether that has to be declared as contingent liability or not is something that we need to take care. And in case there are certain adjustment of the previous year which are there in this current year return, in that case, that kind of a reconciliation one should prepare. Then I have covered all these points of our TDS and TCS. Now coming to the some other credit notes, debit note, I have already taken care. So, my dear friend, these were the important aspect which I feel that when you are either you are finalizing your balance sheet or a P&L financial statement, or you are doing the audit, all these points you should check that the books of accounts vis-a-vis the e-way bill, the 3B versus 2A, 2B versus 3B, all these things are there which you have to check to see that you have on a legal side of the right side of the law. So that's the point I wish to share with you. Now, my presentation, as far as this presentation is over, and I can take up the questions in case you have the questions for this reconciliation part. So I have already received 15 questions. Bhinav Jainji is asking a question, so I will take the questions on a fast track. Dear sir, has there been session on the modified ISD provision which will make cross-charge method invalid? If not, humble request to please conduct a webinar on the new ISD methodology. So maybe on the next week, I will request the Manojji that in case we can take up modified ISD provision in the next webinar, wherever is there, maybe not, if not tomorrow, maybe on next Friday, you can take up. Vinodji, do proprietorship firm registered under GST need to show sale of property which is not related to business and show under capital gain? Do we need to such sale in the GST return? It's not required. It is neither a supply of goods nor a supply of service. So it will fall under the Schedule 3, Vinodji. So not required to reflect in the sales GST return. Abhinavji, director of company rented out residential property for commercial purpose to company. It is taxable. The property is in state A. The company is not having registration in state A, but is having a registration in state B. So it will be under the reverse charge mechanism, and the company can pay the CGST and SGST in this particular case, and has to be paid the tax under the reverse charge mechanism. Abhinavji asking another question. Company brought car for 10 lakhs. Company did not claim ITC. So when you are selling the car, so there is an exception available for the selling of car that you are not required to pay any tax. But otherwise, for other assets where you have not claimed the ITC, it will be only the differential value, that the depreciated value versus the actual value you have to pay because you have not claimed the ITC. So that will applicable even on the car as well. Some security services provided are charging GST in invoice, but RCM is applicable. So you should not pay. You have to pay the RCM. Even if you will pay, the RCM liability will remain there. So it's very important that you should be aware that in case the activity is falling under the RCM, you are not supposed to pay under the forward charge. Jyoti ji is asking a question. If invoice issued at time of suspension of registration because of the Rule 46B, can we sale is treated as registered or unregistered after registration is restored? Jyoti ji, I'm not able to understand the question, but just to share with you the glimpse, like the ultimate point, that if the suspension of the registration is there, but the registration got restored, so all the sales will be treated as a registered sale only. It will not be treated as an unregistered sale. Abhinavji is asking a question. If a company take group medical insurance of the employees pan India, is ITC available? The answer is no. It is not available because that will be treated as a personal expense. So the credit will not be available. Jyoti ji is asking a question. Is the party in violation of ITC reversal discount? What we will do, sir? Any point of audit report, sir? Yes. There will be a liability in case the ITC reversal is there and the assessee has not reversed the credit. In that case, you should create a liability of the assessee along with the interest at least to the point when you are signing the report. So up to that point. So that's the point which you have to take care that you are properly disclosing this transaction. Abhinavji is asking a question. Is the amnesty scheme, or in case, Jyotiji, there is a dispute that whether it is actually applicable or not, in that case also you should reflect in your audit report that there is a confusion whether this ITC reversal is required or not. So at least there should be a clarity from your side if the SSC is not giving that clarity, is not having that clarity. Abhinavji is asking, is the amnesty scheme of the GST notified? The answer is no. 3 months time passed to pay the due. We have only paid the tax. How to get interest and penalty waived off? So very soon it will be notified. Maybe in a week time you will get, Abhinavji. So wait for that time when the amnesty scheme, it's not amnesty scheme, but it's section 128A, which will get notified. Jyoti ji is asking a question, in case GST on builder who make floor wise normally 3 or more floor, not required to be registered in RERA, how we charge GST? The same provisions will applicable. It is the 5% rate will be there without ITC. So that's the same provision is applicable whether you are registered in RERA, required to register in RERA or no. Sir, if the company filed the TDS return filed on April and old regime, but after employer file return is new regime, department issue notice so that liability of auditor in audit report as per the TDS provision. Jyoti ji, I need to understand your question. Better you write the question again, what you want to ask. If a trader is adding repair service as an income in the profit and loss account while preparing the income tax audit, will it be counted as turnover in GST? Repair service, yes, it is taxable under the GST law. So you have to include in the GST return, as well as you have to show the liability as well. Anonymous attendee, I just wish to share with you. Trader doing a repairing service is taxable. So it's you have to reflect. In case the company is buying a large quantity of plastic and sale in small quantity, can it amount to manufacture? As per the cost audit purpose, I'm not dealing with the cost audit, so I will not be able to give you the answer. But on the earlier excise regime, it was like treated as a manufacture. But now the excise law is not applicable. In the GST law, it is not a manufacturing process. So just to clarify you. Sir, can we classify penalty or interest in cash ledger in balance sheet? I'm not able to understand the question. Mahinder Jain ji, as GST payable or as on 31st March is not in an expense, then why we check the section 43B of the Income Tax Act? Just to share with you, Mahinder ji, that in case there is an old liability which is pending, that you have to reflect in 43B, which I was mentioning you. It's not a case of a 31st March liability. It is the old liability of a GST which is not paid. Sir, please repeat the checkpoint for the sale of fixed asset. Jyoti ji, just to share with you that in case, say for example, I'm giving you an example. I believe that my screen is visible to all of you, or I will. What I will do, I will prepare a whiteboard. Just a second. I give you an example as well. So Jyoti ji, just to share with you. Yeah. So in case somebody purchase a fixed asset for rupees 5 lakhs. Okay. In 2020. Maybe we take it as a June 20. Now we are, or I will say June 20, no problem. And now he's selling the asset in the month of August 24 for rupees 1 lakh. Okay. And the tax rate is 18%. So 90,000 rupees was the GST. So 90,000 will be divided by 20. Multiply by how many quarters I use that. So June quarter, then September and December. So 3 quarters for 2020, 4 quarters for 21, 4 quarters for 22, and 4 quarters for 23, and then 3 quarters for. So practically it will become 18 quarters. So for 18 quarters, I use this asset. If I'm not wrong, 20, 21, 21, 22, 23, 24. No, it will be less. So maybe 14 quarters. So I use this asset for a 14 quarter. So in that case, 4,500 rupees per quarter multiplied by 14. So it will come around 56 and 50, 4,500 plus 14. So it will come 63,000. So the 63,000 credit I am eligible for. Meaning thereby I have to reverse 27,000 rupees as a credit over the transaction value, whichever is higher. So say the transaction value is 18% on 1 lakh is 18,000 rupees. So whichever is higher. So in this case, though the transaction value is only 18,000 rupees GST, but actual reversal will be 27,000. So whichever is higher. So A or B, whichever is higher. So in this case, the GST liability will be 27,000 rupees, which I just wish to convey you through the section 18.6, which I just discussed. So that's the point. And now coming to the question of Hari Kishan ji, advance received on 31st March, tax invoice raised in 24-25. How should we report? So if the advance is received on 31st March, the liability will be there on the 31st March itself. That's the point I just wish to convey you, Hari ji. If the advance is related to the services. Mahesh Gupta, if the taxpayer has not paid tax on the debtor interest and SSC is exempt from GST being grain trader in Naya Bazaar. So if the main activity is exempted, then the interest will also be exempted. So I'm not saying, Mukeshji, that the interest only will be applicable. So you have to see the main activity. So if the main activity is exempted, in that case, the interest will also be exempted. For security deposit, Jyoti ji, I mentioned that in case of a security deposit is a refundable security deposit, then there is no GST liability. But is a non-refundable security deposit is there, or the security deposit adjusted against the consideration. In that case, the liability of the GST will be there. Can you please explain the RCM on security services? Chidrup ji, just to share with you, the RCM will be applicable on the security services and you have to pay the tax within 60 days from the date of invoice or payment made to the security service, whichever is earlier. And based on that, so say for example, you paid on 20th of March. In that case, the next month, 20th of April, the liability of payment will be there. And the Maheshji interest 5 lakhs ho ya 50 lakh ho, if the main activity is exempted, there will not be any liability. Ram Gopal ji is asking a question. Today, webinar on essential GST tips before filing income tax was exceptionally informative. The insights shared were invaluable, making this session truly enriching. Thank you, Ram Gopal ji. Hari Kishan ji, SSC has claimed ITC on motor car. Should we report? Yes, the answer is yes. Unless and until the credit is available because the motor car is being used for the transportation of passenger or the goods. In that case, the credit is available. Otherwise, it is not available. So you have to report. That's the point I'm talking about. Sanjay Kumar Garg, no ITC claimed on generator by petrol pump. Whether GST chargeable on sale of genset, in that case, it will be only on the transaction value. So the reversal of the ITC will not be there because there is no ITC available. So in the rule, in the section 18.6, there are the A or B, whichever is higher. So in this case, only on the transaction value, the GST will be applicable. Kapil Bajaj, whether GST on corporate guarantee on a related party is paid now, if the related party can claim the 100% of the credit, then it is not applicable. Otherwise, the answer is yes, it is applicable. Whether composition dealer has to account for GST on day 2 advance received on goods to be sold on later date. GST on the advance received for goods is not applicable, as I mentioned you. It is only on the sale of goods when you are supplying. If the trader is adding commission as income in the profit and loss account while preparing income tax audit, will it be counted as a turnover? If the answer is the taxable, if the commission is taxable, the answer is yes, it will be. Not visible. Jyoti ji, I prepared this. Sorry, I believe that I prepared that chart, but I not shared the screen. So maybe that mistake is there on my part. Jyoti ji, I prepared a complete chart to help you with the illustration. But I believe that I forget to share the screen. If I'm correct, I believe it was visible. If the Kajal can explain.
No, sir. No, sir. It's not visible.
No, right now I'm not doing. Earlier I mentioned an example.
Yes, sir. It was visible.
It was, na?
Yes, yes.
That is I'm asking. So Jyoti ji, it was visible anyway. Sumesh ji, in some cases, client book RCM payable for the month of March with the corresponding effect of input. My question, is it correct to show the input as a current asset as the right has not occurred? Yes, you are right. Unless and until you have not paid, it is not an asset, asset for you. Will there be any session on amendment in GSTR 9? Yeah, I will convey to the team. They will take care of this aspect. I purchased a car and ITC was blocked under section 17.5. Anilji, you are right. It is not available. Whether the GST payable on the sale of this car? Yes, the answer is only on the depreciated value vis-a-vis the actual value of the sale of the car. If the difference is there, In that case, the taxability will be there. Jugraj ji, if a machinery purchased in the year 2015 and now it is sold, so it will be only the transaction value, the GST will be applicable. No need to reverse the credit. It is only the transaction value on which the GST will be applicable. If the client make a multiple invoice books, that's not permitted. You have to report to the department. In case of a reversal under section rule 42, the reversal were made in GSTR 3B. Do we need to reclaim the ITC and then reversing it in table 4B1? So table, Shivamji, I'm not dealing with. Maybe my team members can answer you later. So Kajan, if you can arrange the reply to Shivam on this particular question. Vinodji, thank you very much for your kind words. Manoj Kumar Rumta ji, if security service provider is registered and issuing the XC invoice, is RCM applicable? If the particular activity is under the RCM, in that case, it will be under the RCM. Forward charge will not be allowed. If a person is unregistered under GST Act exempted for selling agriculture produce, then interest received from debtor come under GST Act, the answer is no. So that will not be applicable, Jugraj. I explained you in this session many times. Section 13(8)(b), intermediary, where place of supply is the location of the supplier, what has to be accounted and paid for by supplier of IGS, it will be CGST plus SGST only. Abhinavji, corporate guarantee given by A to B, B is registered and claim ITC, guarantee value can be taken as 0, but if the B is not registered, then the A is liable to pay 1% of the corporate guarantee at the rate of 18%. Any mobilization advance received from government department is GST applicable? The answer is yes, if that is related to the services. Then, my dear friend, Sanjay Singla ji is asking, is RCM applicable on fancy or no allotted by transport department? On fancy number. On fancy number. I believe it is not the case. In case, Sanjay Singla ji, it's a personal, we are buying the vehicle. So in case, I believe that is not applicable. But in case it is a corporate purchase, somebody is registered with, and the transport department falls under that particular category, the answer is yes, you have to pay under the reverse charge mechanism. As per the rule 28, Gitanjali ji is asking a question, if the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value. So for the audit purpose, is there any specific provision which need to be taken care of a stock transfer? The answer is no. If you ensure you are fully aware of that the buyer is eligible for a full input tax credit, there is no exempted turnover. In that case, there is no separate disclosure is required as far as the GST aspects are concerned. There was no GST in year 2015. So Jugraj ji, that's why I'm saying if you are selling the machine, it is now you are selling the transaction, doing a transaction. That's why the selling of the old machinery will be taxable under the GST Act only on the scrap value. Bhima ji is saying thank you. Vineet Goyal ji is asking a question. Can IGST will be issued for rental of a commercial property? The answer is yes, if it is located in the another state. Aruna Roy ji, if an advance is related to service, but billing can be done only on identifying the customer, which may be after 3 months. So it's like a selling of a coupon, I will say. I believe so. So otherwise, you must be aware of that who is giving you the advance. And Arunji, accordingly, you have to see that whether it will be the IGST or the CGST. Jyoti ji, as I discussed with you, in case of a builder, if the rate of tax is 5%, you are not eligible to claim any ITC. Whether RCM is applicable on fee paid to MCA, Kapil ji, just to share with you, that is not taxable under the GST law. The fees paid to MCA is not taxable under the GST law. Karan Kshatriya, our client registered under charitable trust and they are providing training courses to medical students. Yes, it is taxable. Rajesh Dabi, taxpayer is purchasing mobile frequently while the credit is not available. Jugraj, if company is exempted to take GST on cold storage service and it is now selling, the answer is yes, it is taxable. Abhinav ji, can IGST RCM be paid by the company where the director of company, it is the CGST plus SGST which will be there. And cold storage service of agriculture produce hardly makes any difference. So I answered all the 55 questions except the one where the table part is being discussed. I believe that the team has noted down that question of
Yes,
one of
sir.
yeah, and you will suitably email the reply to the gentleman who asked that question. I
Sure,
don't
sir.
name, but that was there. So with this, Manojji, I completed the deliberation. Over to you, please.
So, sir, thank you so much for the wonderful session, wonderful insights with all of us. In the series of webinar organized by Team Taxo, our next webinar is scheduled on 24th September at 7 p.m. on how to handle GST litigation by esteemed panelist CA Advocate Upender Gupta sir and CA Dr. Atul Kumar Gupta sir. So mark your calendar and join us for an informative and engaging session. So, with that, we come to the end of this wonderful session today. I hope you all found the session informative and insightful. I would like to thank CA Dr. Atul Kumar Gupta sir for his time today and for sharing his wonderful insights with all of us. It has been an honor and privilege to have you all with us. Thank you so much, everyone. Thank you so much, sir.